Hello, it's time to look at some charts again. This is the US Futures weekly chart analysis for the week ending 16th of September 2022. First chart is the US dollar index futures. We'll draw the lines in. You can see that this week price dipped well below the previous bar's close here, and then it's pushed up and challenged the highs of the range, but closed just below. This was mostly a consolidation bar this week. It's dipped lower. Any supply that's been drawn out has been absorbed. Prices pushed higher. It hasn't issued enough challenge to establish any new highs, and it's closed just below the lows of the range. This was effectively a consolidation bar, an absorption bar. Price has moved higher through the week, but overall this was likely a consolidation and absorption bar. We'll see the response to that next week, which may well be a further push higher. Next chart is the E-mini, the S&P 500 index futures. Down here, we had a period of buying support come in, and this was the response to it. There was always likely to be supply drawn out through here, and the US dollar strengthened considerably and pushed price down for 3 weeks here. There was an attempt to recover in response, but price has dipped below that this week with a widespread bar. You can see it initially attempted to move higher, but that's failed, and price has moved lower and is now trading adjacent to where buying support came in previously. I would expect there will still be some buying support for 3,800 or just below it. That is yet to be seen, but I would expect to see at least some emerge from the left as price comes down to this old previous support level and test a lower level before there's a response higher. The 10-year note futures have been a bit sad and sorry for a period now. Price is trending lower. It's broken below previous support that came out around the 17.5. We had last gasp support here. You can see prices closed clearly below the previous bar's low. And although it closed slightly off its own lows on an increase in volume, this was genuine trading by the looks. It was almost average. There's no volume anomaly. It doesn't look particularly strong. There may be an attempt to hold on around the 115 level, and that may be the reason for the slight close off this week's lows, but that's yet to be seen. We'll see how the trading goes early next week in response. Copper price futures. The breakdown line is right up here and well out of the way at the moment. There was some buying support come in here. The price moved up, tested for supply, and looked like it was going to head higher, but it was caught by the volume here from the left. Price pushed down, supply was drawn out. Here was the response. There was an attempt to move higher last week, albeit on low volume, and this week was a consolidation bar. It was effectively sideways. There was an attempt to move higher initially. Price then moved lower and closed well off its own lows for the week on a slight increase in volume. So pretty good volume, really. This was an absorption, a consolidation bar for the most part. Some supply was being drawn out off the highs, no doubt, but there was buying off the lows. So we'll call that a consolidation bar sideways and look for a response. If anything, this market is slightly stronger than weaker at the moment. It doesn't really want to go down. It's attempting to absorb the strength in the US dollar and trade at least sideways. Gold price futures had a poor week this week. It's closed clearly below the previous support. Here are the two breakdown lines. Prices closed below the 1700 breakdown line this week, and unless it's able to reverse this week, that'll be a clear breakdown. So really price needs to recover the 1700 level next week. If it proves it cannot do so, it will likely continue lower. If it proves it is able to recover the 1700 level next week, you may get some sort of reversal bar that looks like that. But that's yet to be seen. We'll move to the next chart, which is silver price futures. This market traded much different than gold this week. Here was the lows of the range. This is the breakdown line here and here. And price moved higher this week. Gold's moved right down to these levels. I think how we're reading this now, at the time I called this as buying support. Spread narrowed, volume increased to well above average, but the next bar was lower. But what you've effectively got is a 2-bar reversal or a mini shakeout of the lows of the range. The initial down bar is on high volume, and then it's floated up within a supply vacuum on very low volume. So this is more an engineered shakeout, if that's what it really is. That's the form it takes. There's two forms of reversal like this. The first form is more an engineered style, with the initial down bar having the higher volume and the up bar having low volume, moving higher within a supply vacuum. The other form has low volume on the down bar, and the second volume is much higher, in what I often call a scramble for positions. And it's when the market has moved lower and then been caught out or wrong-footed, and those positions need to be bought back quickly. That doesn't appear to be what's happened here. It looks like buying supports come out here on this high volume. There's been an engineered shakeout of the lows of the range, and then price has responded higher, confirming this shakeout and setup previously. Now, supply's been drawn out in the highs of the range, and that's not unexpected. There is old stale supply to the left, no doubt. But this is quite promising. There's a move in this market. Buying support, an engineered shakeout, a response higher, which helps to confirm the previous two principles. I think the highest probability, at least early next week, would be for a test for supply. Something like that. Now, that won't be a weekly bar. That would be for the first day or so next week. And then if supply is found to be low, that is, selling pressure is found to be low, there'll likely be a response higher, and you'll get a bar that'll push up, perhaps more towards the $20 level and the highs of this bar. So that's what I'll be looking for next week, an early test for supply. If volume is low, then a response higher and perhaps a push up towards the $20 level. Light crude futures continue to drift lower. Volume increased this week. Spread narrowed this week. There's quite a bit of uncertainty in this market at the moment. There's periods of buying support come in, and then price is forced to drift lower. Supply doesn't appear to be particularly high. So there's a battle going on between the buyers and the sellers. The sellers are holding the upper hand at the moment, but only slightly. And the buyers could turn this around fairly quickly. At this point, the sellers have the upper hand and price continues to drift lower. Aussie dollar currency futures. It looks like the 70-cent level is probably gone now. It tried to regain that level a couple of times and eventually failed to do so. We've had minor support around the 68-cent level, and price has been trying to hold on there. This week, with the strength in the US dollar, prices dropped below the lows of this range. There's a bit of last gasp support from these two bars, and it's trying to hold on to that. It almost seems inevitable now that price is going to move down to the 65 level. there's been stronger previous support at 65, and that may be where this market is headed over the next week or so. I'd expect price will continue to try to hold on to 68. I'm not sure it's going to be able to in the longer term. It'll be partly due to what happens on the US dollar index, but also there's a magnet now that looks like it's drawing price down to the 65 level where previous support has been found in the past. Bitcoin futures have broken down a couple of times more recently. There's reasonable support between 20,000 and 16,000. Price is sitting on top of that support at the moment. And there's buying and selling within this zone through here, just on top of the 20,000 level. It's a battle between the buyers and the sellers. Neither side are able to gain the upper hand at the moment. You've had buying come in and strong buying. You've had selling come in and fairly strong selling as well. At some point, one side will gain the upper hand, and this will prove to be strength in the background to either move. If this is a breakdown, the buying in this zone will be sold, and that will further push price even lower with even more vigor. But if there's a breakout, this zone will prove to be strength in the background and will support the move higher. It will depend which side eventually gains the upper hand, the buyers or the sellers, and it's a fairly even match at the moment with neither side gaining the ascendancy. Just back to the US dollar index quickly. This chart affects so many other markets. You can see that price did trade well below the previous bar's low for some period of the week. It has pushed higher. There's been no serious challenge to the 110 level. Price moved up to it. There was a tiny challenge there, but it hasn't really made a serious challenge. I would expect the highest probability for a test for supply early in the week. And when price moves lower like that, you might see the other markets bounce a little bit early. But if this market doesn't draw out very much selling pressure, supply is low, then you'll see price move higher in response and properly issue a challenge to the 110 level. And if that challenge is successful, it'll push out and you'll get a bar that closes more like this. Perhaps not quite to that extent, but more like that. But look for an initial test for supply early. If supply is low, selling pressure is low, price is not forced right back to, say, the 107 level. Prices can only come back a short distance and then pushes back up to close adjacent to the previous close. Then that would be a good sign that later in the week, price will attempt to challenge the 110 level and push higher in response. Okay, thanks for your time. Hopefully that was worthwhile watching. See you again next week. See ya.